Good afternoon. Let's do some business. We are doing it live right here in the 4 o'clock hour, doing more at 4, right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at kbc.com and your on-demand Mottek On Money podcast, kbc.com, and all your favorite podcast platforms. It's a day of solemn remembrance today. Wall Street joining the nation in remembering and honoring the lives lost on this date 23 years ago on September 11, 2001. On this 9/11 day, today's ceremony in New York honoring the 2,983 people killed in the 2001 attack on the World Trade Center in New York, the Pentagon aboard Flight 93, as well as the 1993 World Trade Center bombing. Moments of silence were observed. Ceremonies also held here in Los Angeles and are still being held this evening in the Los Angeles area, with another solemn ceremony set for this evening at the 9/11 Memorial in Beverly Hills. All three of the major stock market averages saw a pretty wide swing today, scoring big intraday comebacks. Looks like a lot of people bought the dip today, overcoming earlier weakness right out of the gate. The Dow was down more than 700 points in the early going, came in for a closing gain of 125 points. The S&P 500 moved up 59 at the bell, and the Nasdaq also ended the day higher by an impressive 370 points. It had dropped about a 1.5% earlier during the session. All of this after the latest report on inflation came out. The Consumer Price Index came out this morning pretty much in line with what was expected. The major averages moved higher ahead of the final hour of trading, with the Nasdaq and the S&P 500 seeing their biggest intraday comebacks in about 2 years. IBM taking the spotlight. Here's one that we don't often talk about, but Big Blue helping to contribute to the Dow's cause today. And it looks like on track for a record high today. We'll take a closer look at that one coming up. Investors now still assessing the debate performance last night between Republican former President Donald Trump and Democratic Vice President Kamala Harris, as betting markets swung in Harris's favor after the event. We'll be taking a closer look at that and how the markets digested all of this. Meanwhile, businesses in Los Angeles are being sandbagged with frivolous lawsuits. I'll talk about the latest with Marianne Marino, Regional Director of Citizens Against Lawsuit Abuse. Of course, tax policy, a big part of the presidential contest, and we'll get a comparison and the very latest on what we're hearing from Grover Norquist, the president of Americans for Tax Reform. Also, we're watching what's happening in the Gulf of Mexico today with Hurricane Francine striking Louisiana this evening as a Cat 2 storm, with forecasters warning it could bring deadly storm surge, widespread flooding, and destructive winds on the northern U.S. Gulf Coast. The price of oil moving slightly higher today, of 3 cents at the moment at $67.34 a barrel. Joining us live now on all this, investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com, and author of the 25% Cash Machine. Brian Perry, thank you very much for coming to the line on what was a head-spinning day today.
Sure was, Frank. Thanks very much for having me here. It was a pretty ugly opening here that was fueled by two major catalysts. One is the fear of a 28% corporate income tax, up from 21% if Kamala Harris wins the election. That got people going in that direction. And then also the core CPI rate, which came in at 0.3%, which is just 1/10 higher than the 0.2% forecast. The culprit there was certainly shelter. Owner's equivalent rent, again, is being stubborn here, so cost of renting and owning is still stubbornly high. That pretty much took the 50 basis point narrative off the table at that point here, because it was kind of going in a 50-50 direction here, which I've been a supporter of because I'd rather see the Fed get in front of this instead of behind it. That caused, some initial selling in the bond market here, which kind of, cascaded into a lot of selling here. We were down to 700 points on the Dow at one point during the morning here. It was really, looking pretty ugly. However, you had the market here, stage a major reversal during the course of the day, led by none other than NVIDIA, when CEO Jensen Huang came out on a CNBC interview and talked about how healthy the company's order flow is, and the business of they're going to be delivering their next generation chip here in the fourth quarter here, Blackwell, and also just that we've seen this week here people start to look at the AI trade as seeing that it's still a very good cycle that has secular momentum here, meaning multi-year. Oracle had great numbers this week, and Larry Ellison came out and was talking like, of the 168 data centers that they currently operate, they're going to build up to as many as 2,000 around the globe before this infrastructure for AI is complete. That really put a bid back underneath the AI trade here, Frank. And therefore, you had the mega caps, which you kind of seen as a safe haven in times of turbulence. Like, we're really in a washing machine market right now between, after post earnings here, second quarter earnings here, and then going into third quarter with all this data here, and you got the Fed coming up and all the uncertainty that's surrounding the election. There's a certain gravity of money, trading money, that goes back right into the names that they trusted, that have got them to this far with the market. So that kind of took over, and therefore you had this big move in the chip sector today, which really brought everything back to life here. And then software also had a really good day too, with some of the big software names catching a bid. So all that being said, we're still in a moderating economy here, Frank, where manufacturing has been down 22 straight months here in the U.S. You've got weekly crude oil had a big build here, 833,000 barrels here this week alone. As you noted, crude touched 65 a barrel today before catching a bid here. So that's you're looking for demand out there, and that's certainly not happening. The Japan's Tankan survey, which is their economic conditions type of a survey over there, that fell to 4 from 10, which is really, it basically the confidence by those, those manufacturers over there is significantly getting weaker. And then you've had this big sell-off in China here, which is their onshore Shenzhen CSI 300 index. That's down 45% since the high of February 2021, and down 14% since May, hitting a low, a cycle low here. With all that's about a concern of a slowing economy in China here. So there's, you got these two big economies here in Asia, which are contracting, at a fairly significant rate. And then you've got this business here of weaker oil, weaker commodities, all down across the board. So that pretty much shows you that there's disinflation is not just in place, but also GDP growth is going to probably start to slow here, as we've seen here, just certainly from the jobs numbers, which have also been softer coming in here, and a lot of them have been massive revisions, which we all have read about and heard about. So I'm of the view that the Fed next week should actually cut 50, but right now the market is not. There's just no way, because it's an admission, one, of being behind the curve, but it also would make in their world, they'd probably think it would spook the market. So I think they're going to try to keep an upbeat tone here. You've had Ally Financial come out here this week, which crashed about 20% here the last couple of days, talking about real challenges for the consumer here in the lower end here, with delinquent car loans and consumer loans and delinquencies. That's been notable. You had also Goldman Sachs and come out and say the trading volume here, their activity is slowing here. So the financials here this week are struggling to hold a bid here. J.P. Morgan said the same thing about their trading operations. So there's the good, the bad, and there's the ugly out here going on, and we've got Warren Buffett just unloading B of A shares left and right in a big time way. And then on the other side, you've got Dell Computer and Palantir being added to the S&P 500. Great news for both companies here. Both are doing extremely well in their parts of their business that they're in. So all in all, you really got it's a stock picker's market entirely, Frank. And I think we're going to, the S&P retook its 50-day moving average, which is key. That's everybody's watching that all the time. And the yield on the 10-year bond fell to 3.65. It rallied, during the latter part of the day after selling down. It was a very strong $39 billion 10-year bond auction today. It met strong demand. So a lot of things in play, a lot of things at work here, but you've really got to know how to navigate this market.
Thank you for that excellent, comprehensive assessment of things here at the moment. We're on the air with investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. IBM hitting a record high for the first time in 10 years. That is certainly notable. Up more than $4 today at $209 and change. Big Blue, of course, as it's known, one of the blue chip stocks, probably the most famous over the years, part of the Dow Jones Industrial Average, which moved up at the close by 125 points today. What about IBM, which I think haven't talked about it in probably about 10 years, right?
Right. Yeah, I think you're right about that. The Big Blue is it used to be nicknamed "I've been moved," when it was really a hot stock. And the chairman there and CEO has done a really good job, really unfolding this whole Watson AI movement within IBM here. They've been able to wind down a lot of legacy business here, which keeps these types of companies like IBM and Cisco and even Oracle to some extent down, because they're so embedded with legacy businesses that their new ventures and their new efforts and projects don't really move the needle until they really get to scale. So Watson is coming to scale here, and they're moving a lot of their businesses to also, which is a SaaS, software as a service. So I like IBM in here. I think it's ahead of itself technically speaking here. Might want to see if it pulls back here to 200. The 20-day moving average is right around 198 here. The 50-day at 190, but it has definitely defied all this volatility here that we've seen here from mid-July through most of August and the front part of September here. So you got to respect companies and stocks of those companies that really buck the trend in trusted names where you're still getting a 3.2% dividend yield. So IBM is back in a big way, and it's fully taking out the highs with gusto.
Very interesting. And, of course, NVIDIA, we can't miss talking about the Magnificent One and the ongoing AI focus. NVIDIA shares having a nice rebound today of nearly $9 at 116 and change. What about NVIDIA here? Looks like buyers are swamping the market here, buying on the dip. What's going on here with NVIDIA?
Well, here too, NVIDIA's really gone to just not doing chips; they're doing the full stack, which is it's the some of the hardware and software that's embedded in it with the chips. So this is all becoming a package type of an arrangement here, and they still dominate probably 95% of this market here for the AI chips, even with AMD getting some press here recently and other names. But ARM is going to be in Apple's iPhone 16. But NVIDIA here, the biggest story out there that surrounds the company is constantly with Taiwan Semiconductor here, and the geopolitical risk of that, because they're highly dependent upon TSM to as their foundry, to maintain high level production of these H100, H200 chips, and the new Blackwell chip coming out in the fourth quarter. So they're on schedule here to release their fourth quarter here, and he was pounding the table on that and talking about how demand is still very robust. Their order book is really fat, and so that's where you just heard people saying, you know what, I know that their growth rate's going from 120% to 41% next year, this year over next year, and that really was the rub on the stock last week. But 41% growth. Try to find a company of this size growing at 41% sales growth, earnings growth, and you've got you just can't find that many. So it's trading at roughly let's say 25 to 30 times forward forecast earnings. That's a tough. Anytime you can buy a stock trading at a PE below its growth rate, and it's got this kind of quality to it, Frank, that in my 40 years in the business, that's something that you got to respect, and that's something you should be attracted to.
On your live with investment expert Brian Perry, and we have some breaking news here now, Brian. This is just crossing the wires now, affecting one of America's largest railroad companies, which happens to be publicly traded, and that is Norfolk Southern. I don't know if you've seen this, but CNBC is reporting that Norfolk Southern's CEO Alan Shaw has been ousted effective immediately after the board determined he engaged in a consensual relationship with the company's chief legal officer. Company making this announcement. He'll be replaced by Norfolk Southern's finance chief. The company announcing the legal officer will be terminated as well based on the board's preliminary investigation. So that's just crossing here. Norfolk Southern, one of the big railroad companies, will be in focus, looks like, first thing tomorrow morning.
Sure, it will be. The C-suite, shenanigans, that always catches, shareholders off guard in the market as well. That stock really is traded much better than most other transportation stocks. They're at around $253 at the close today. The 52-week high is 263, and a number of transportation stocks had just been obliterated. Mainly the truckers of late. So they obviously have, they're a big-time intermodal operator here. So where CSX is more of the coal and the larger agricultural products here. Union Pacific is probably the cream of the crop, but Norfolk Southern here is a very well run company here, and I know they've got a deep bench, but anytime this happens here, Frank, it's going to be a pullback. And they had the big issue back in Ohio where they had a derailment there, so they've handled that pretty well here. The stock probably is a good long-term buy for people, but again, the economy is starting to moderate here, so be careful.
All right, and of course, the fallout from the debate last night, the dust is still settling, and Wall Street's still taking it in. It was quite a seesaw session today, but based on the Trump Media and Technology Group shares, which is sort of a proxy on President Trump's chances, right? That's the company that owns Truth Social. That stock pulling back today. And what other impact are you seeing post-debate as far as the market is concerned?
Well, there's been, definitely the quote, the Trump trade has been on in a number of areas here. Energy, which got whacked again today. All the big energy companies were down, even after oil staged a reversal here. Despite what Kamala says about, her pro-fracking position here, no one believes that, and so. It's been widely known that the leases for federal lands to drill and prospect on have been curtailed dramatically, or almost halted completely here by the Biden administration. So that took a hit. You had obviously a big pop in solar stocks today, but that's still, I think, a net short there because a lot of states are going to be taking away their tax credits here and going forward. At least that's my opinion. And you have. In general, that people are going to have to start thinking about what stocks do I own that are, really not hedged against, much higher corporate taxes here, because that goes in play. Because what that does, Frank, it initiates what is called, multiple contraction or multiple compression, where price earnings ratios, they're already starting to come in a bit because of a lower forecasted GDP growth. That's one area that squeezes PE ratios. But the second is higher income taxes, higher corporate income taxes. Yep. So what you're going to see here is more companies moving to Ireland. Sorry to say, but that's really the effect of this is going to happen.
We're going to talk to Grover Norquist about tax policy, but that is certainly an important point that you raised. While we have a few moments here, Brian, let me ask you the big question here. Where are you putting money now and/or taking it off the table?
Well, you have a luxury, Frank, of looking back on the Q2 earnings season here, where you have companies that beat and raise and then you have a market here that pulls back. So you have a chance to buy those stocks that were peaking and doing really great, and they've had nice consolidation pullbacks. One of them is CyberArk, CYBR. That's an Israeli cybersecurity company here. That's emerging as a real leader here, and so that one is while the market was down 700 points today, that stock was up $4, and so you had a big reversal here. The stock's pulled back about $30 from the high, trades around 265. I've been buying heavily into Blackstone Group, BX. They've been buying a lot of property here, expecting this interest rate cycle to come down. Extremely well run, biggest private equity company in the world. Their biggest property owner in the world, BX, looks really good here. Robinhood here, getting some nice upbeat comments from the analyst community. Hood, HOOD, they were a big advertiser last night on the debate, and they're attracting by matching people to bring their accounts over with deposits in gold, and I think it's a very, very smart advertising campaign. I started buying Zoom Video here, Zoom Communications here. I'm at Mint Asset Management. We actually changed our phone system to Zoom. It's a really high-tech system, very full-featured. It's really it's a really awesome phone system, and it's not just visual now. It's like it's a regular phone system for all your mobile systems. So that's the ZM had great numbers here. The stock vaulted from like 61 to 75. It's pulled back here to 67, and I think it's a really great reversal here for ZM. And I've been buying some Berkshire Hathaway here on the dip. It traded up to 284 recently here, and it's pulled back here to around the 265 level right now. So take a look at Berkshire Hathaway here, and then I'm buying back into more gold, Gold Miners GDX, which is the ETF. I think the gold here looks really good here going forward, and typically you get a more bang for your buck out of buying the miners than the physical itself. Coming off the banks. Yeah, banks look like they're in trouble here. J.P. Morgan, I sold my J.P. Morgan position today. Truist, and then lastly, Google. I sold Alphabet here this week because they're just in a real world of challenge here with Chat GPT, and a new company, Frank, that's still private, but Perplexity.ai. People need to be on the lookout for this. Started by some guys in 2022 that were a carve out of OpenAI, and with big investors like NVIDIA and Jeff Bezos heavy into this particular company here. You can actually go use the app right now on Perplexity.ai. Again, adding more features and searches and search features and advancements. They're going to be getting a lot more of this ad search, from Google. So Google has really got a lot of competition here for the guts of their, the meat and potatoes of their business and that search. So that was, to me, is like a lot of competition here coming after Google. Plus, they're under antitrust, attack by the FTC.
Wish we had more time. As always, Brian, we'll have to stop there. I could talk to you all day. Always enjoy your presentation and your analysis here. And I have to say, your new phone system sounds good, and you were not on mute this whole time. So, so that's very, very important. Investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. Also author of the 25% Cash Machine. Brian, it's always great to have you with us. Thank you very much for joining us live this afternoon.
Always great, Frank. Have a good rest of the week.
Thank you very much. And right after the freeways we go now, 790 KBC. Mottek On Money continues here, 790 KBC. Inflation number out today. The Consumer Price Index, a broad measure of goods and services, costs across the economy, increased 0.2% in August, pretty much in line with analysts' expectations, putting the 12-month inflation rate at 2.5%. That is still hotter than where the Fed wants it, and it looks like after this reading, it looks like it's more likely now that the Fed will approve a 0.25% drop in the benchmark rate when they have their big meeting on September 18th. We saw a pretty wide move for the stock market today, with the Dow closing higher by 125 at the bell, the S&P 500 of 59, and the NASDAQ gained 370, and the yield in the 10-year note now at 3.66%. And now the latest news here in 790 KBC. Mottek On Money continues here in 790 KBC. Good afternoon. Wild ride on Wall Street today, with the Dow down more than 700 early on, closing higher by 125 at the bell. The S&P 500 of 59, the NASDAQ gained 370. The volatility index, the VIX index, also saw a wild ride, closing down about 7%. Inflation back in focus today, and so are frivolous lawsuits for businesses. As a matter of fact, not even the impact of high inflation can match the devastation being caused to California business owners from abuses tied to the Private Attorneys General Act. So says the group Citizens Against Lawsuit Abuse, a nonpartisan group here in California. And joining us live now is Marianne Marino, Regional Director of Citizens Against Lawsuit Abuse. Marianne Marino, great to have you with us here this afternoon.
Great to be here, Frank. Thank you so much.
It's been a while since we've chatted behind live microphones. Tell us about the group and tell us about this important issue here with businesses being impacted by legal action.
Well, this couldn't be a better venue to share the good news that the benefits of the PAGA reform will bring to business owners, because the outcomes of this are a big win. They're a big win for business, they're a big win for employees, and they're a big win for consumers. So what PAGA was is that it was signed into law back in 2003 when Gray Davis was governor. As a matter of fact, he signed it about 3 days after he was recalled. And the intentions of the bill were great. They were to give aggrieved employees the opportunity who feel that they weren't justly compensated to get fair compensation. And we agree. If somebody hasn't been fairly compensated, they should have the vehicle to do that. But over time, because of loopholes in the law, it just became out of control. The state didn't assign an agency or a labor board to manage the claims. They gave it to the trial attorneys. And because of that, they found a way to make a lot of money for themselves. And by doing that, it was devastating for businesses and jobs and the economy.
So PAGA, as you mentioned, that acronym is Private Attorneys General Act. So this came into, and correct me if I'm wrong, more than 20 years ago, right, under Gray Davis, if I recall correctly, and basically gives employees who feel they were unjustly harmed on the job the means to sue their employers over labor code violations. What typically are you seeing these days?
Well, it was a 20-year effort, and it was a lot of hard work, and it was monumental. But what I want to say is that the businesses, some of the examples of how businesses were sued under PAGA, we have a supporter who shared that it didn't matter that he paid his employees, on time, or that the check cleared the bank. What mattered is that the check stub didn't have a beginning and an ending date. So he was sued as a class action status over 4 years for every employee for every paycheck stub. And because of that, it was a $78,000 settlement when everybody was paid. They were sued on technical violations. So, hey, if there's an employer out there, they don't pay 40 hours, they don't pay overtime, they pay hot checks, they're here 1 week and not the next, well, we agree. They better have a problem, a big one. But that's not the type of cases that these PAGA suits were suing businesses for at all.
All right. If you could highlight that good news for us. We did see the governor signing into law these reforms here. How will these newly signed bills change the situation for Southern California business folks out there?
Because no longer will an aggrieved employee be able to file a claim on behalf of himself and 100 other people who might work at that same company. So because of that one change that is going to have a monumental impact on the outcomes of these PAGA lawsuits, longer are there going to be these hundreds of thousands or $1 million suits. They're going to really limit the amount of these frivolous lawsuits because no longer are people going to abuse the system for their own personal gain and walk away with a big cash cow of money. These are just going to be based on one person who has to prove that they suffered a violation within a 1 year time frame. They can't come back 3 years and say, oh yeah, this happened. It's 1 year, one plaintiff.
All right, so this is obviously a big issue for your group. Anything else on the docket as far as you're concerned? What else would you like to see changed?
Well, thank you. We're on a roll with this. We feel good, but also for the past 20 years, we've been trying to reform the abuse of the Americans with Disabilities Act. That too is really out of control, really impacting small businesses. And with the internet now, I can be, in the house, and I can look at Google Maps and see if somebody has the right blue striping, has their parking lot sign. And if they don't, I go, okay, there's two issues, two violations. I can go and file a lawsuit against that business without ever being there, without ever telling the manager or the owner of the business or giving him the right to fix the problem. That's what we think we need to get done, is that businesses have at least 60, 80, or 180 days to fix the problem before you can outright sue. So hopefully that is our next big challenge that we are going to take on, and we are going to win in California to protect small businesses.
Thank you for highlighting that. Anything else that is top of mind for the business folks out there, on top of all the other big issues that we've been talking about here for quite some time, crime, homelessness, and now these frivolous lawsuits, of course, inflation too, just to put the icing on the cake?
Yeah, well, I just want to offer a tip, and that is, I know business owners are very busy. They give a whole definition to the word busy. And, trying to protect yourself from a frivolous lawsuit or making sure you're in compliance with the Americans with Disabilities Act or PAGA or other issues might not be top of mind. But let me tell you, spend an hour a week or so or two, try and find out what you can do to get that blue striping right, get the right parking lot signs, get that bathroom. If the mirror is too high or too low, that's another violation. Those three things that I just talked about could be a $12,000 loss because it's $4,000 for each technical violation. That money would be far better spent investing in your business and jobs than having to spend it out paying for an unwarranted lawsuit by people who only are trying to abuse the system for their own gain, and never ever do they come back to make sure you have the right parking lot sign.
All right, Marianne, for anyone that wants to reach you or draw on your resources there, do you have a website, or what's the best way for businesses to connect with you there?
Yes, please do. The website is California CALA, so California, CALA.org. It's California, CALA.org.
All right. Marianne Marino, Regional Director of CALA, that's Citizens Against Let's see, let me try that again. Citizens Against Lawsuit Abuse. Thank you very much, Marianne, for joining us live here on Mottek On Money on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. Important geopolitical issues were raised during the presidential debate last night, including China. And joining us live now, China expert Gordon Chang, author of numerous books, including The Coming Collapse of China, and on Twitter, now known as X, at Gordon G. Chang. A special greeting to your ex-followers out there, Gordon. You have quite a few, and thanks for promoting your appearance here this afternoon on Mottek On Money on 790 KABC. Take it from the top and give us your impressions of what was discussed last night during the presidential debate related to geopolitics and specifically as it relates to China.
Well, first of all, Frank, there was a lot of name-calling, both sides, and also there was nothing new that either said about the other. When it came to China, probably the best line was the vice president's, who called Trump's proposals to increase tariffs on Chinese goods the Trump sales tax. Her point was that the tariffs would add prices to consumer goods, contribute to inflation. I think that's probably not correct, or at least not correct to the extent she said, because we know the experience in 2018 with President Trump's Section 301 tariffs on Chinese goods. China, through various mechanisms, absorbed about 75% of the cost of those tariffs. Some estimates have 81%. China probably would do the same thing now because it needs access to the U.S. market. But it was a great line, and I don't think Trump really had a good answer to her jab.
And it is to be noted, as President Trump noted last night, that the Biden-Harris administration kept the China tariffs that President Trump had imposed in place during the past 3.5 years or so, right?
Yes, and he said, well, if they were so bad, why didn't Biden take them down? And that was a good point. I also think that there are a couple of points that President Trump could have made which would have devastated her, but they were maybe a little bit nerdy, so he didn't go into that area. But I think that essentially the Section 301 tariffs were a very good thing for the United States, especially at that moment.
All right, so obviously we're at a critical point. What do you see ahead on the horizon here? Obviously, the polls still pretty tight here, but could you weigh the possible second term of President Trump versus a Vice President Harris term, and what will you expect as it relates to China?
Well, if Vice President Harris wins, basically every new president, regardless of party, regardless of political orientation, gives China a year and a half, 2 years free pass as they try to figure out that they can do it better than earlier presidents. And that usually they find out they can't because China is pushing things. So I think that essentially we would see that with Vice President Harris. With President Trump, we just don't know. He has a lot of things on his agenda. He might want China's help on things. I think, though, generally he would be tougher on China earlier because he went through a very difficult 2020 when the Chinese regime gave him a hard time on social media and through text messages. They had a large campaign that was directed to undermining his bid, and probably President Trump remembers that.
What if China were to take advantage of the situation here now in the U.S. With President Biden, of course, still technically the president, not very visible these days, although, of course, he did participate in the solemn memorial today. This is 9/11. Let me ask you this. If China invades Taiwan, what are the prospects of that? Something that we've talked about, and of course, you've been following these developments very closely. How possible is that wild card at this point?
I think that China is not going to start hostilities with an invasion of the main island of Taiwan, and there are a lot of reasons for that. But right now, we've seen China do two things in the last week which are really disturbing. One of them, of course, is the continued provocations against the Philippines and the South China Sea. That continues a string of events going over months at places like Sabina Shoal, Second Thomas Shoal. These are the type of incidents that start wars. The other thing is that Chinese troops are now about 37 miles deep into Indian-controlled territory in Arunachal Pradesh, which is generally considered to be a part of India, but China doesn't think that. And so that conflict could actually boil over because we're talking about large formations and two large armies confronting each other.
Vice President Harris's pick for Vice President Tim Walz's trips to China also getting a lot of scrutiny here. Tell us your assessment of his connections to China.
Yeah, I think they're very suspicious. If we go back to his taking students to China, that activity had to have been approved by the Communist Party's United Front Work Department. As we know from a series of Daily Caller investigations, Walz's connections with the United Front Work Department have continued as he was governor of Minnesota. And so this is something that's occurred over the course of decades. The United Front Work Department is the part of the party that subverts foreign governments. So any connections with that part of the Communist Party will raise red flags. And so I think Governor Walz needs to explain that to the American people.
And, of course, also Tiananmen Square, right? He was there on one of the anniversaries?
Yeah, well, he got married on one of the fifth anniversary of the slaughter in Tiananmen Square. One could play that either way, that he was celebrating it or that he was trying to commemorate it. But that is not normal behavior. But there's a lot of things, Frank, and I think that he can explain away one or two, but he can't explain away the pattern. And that pattern certainly should raise concerns among American voters.
Thanks for bringing that to our attention. Gordon Chang, China expert, author of numerous books on China, including The Coming Collapse of China, and on X, formerly known as Twitter, at Gordon G. Chang. Gordon Chang, thank you very much for coming to the line here on those important issues. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Hey, it's Rich Eisen here. Join me and my compadre, Chris Brockman, every Monday on the Overreaction Monday podcast.
You're also saying the record's going to go down.
I'm saying the record's going down anyway. The guy.
I don't think you're off on this at all. Like, you're spot on here. I don't think this is an overreaction because we have no idea what we're reacting to.
Come react or overreact with us.
How would you say that? An overreaction, sir. Overreaction Monday, wherever you listen. It's game over.
Over, man.